Nick Timiraos of the Wall Street Journal with us now, the day after, the big day after. It's good to have you. I'm so happy to have you today as we're in the midst of this rally. Yesterday, we weren't exactly sure where the market was going to go. Were you surprised yourself in the room when you heard the projections revealed of at least 2 more hikes and Fed funds going to 5.6?
Not a lot, Scott. I mean, obviously, the expectation was that the median projection for interest rates would go up by 1 tick, and it went up by 2. But I think people are still digesting what it all means. I think the July decision, just as coming out of the May meeting, there was a high bar to go in June. Coming out of the June meeting, it feels like there's a high bar to skip again, right? This idea of spacing out the increases and looking at 3 months of data as opposed to 6 weeks of data, I think it could be a little bit confusing in the weeks ahead, because if we get, say, softer inflation data and people say, well, you didn't hike at the last meeting when the inflation data looked worse, why are you hiking now? So they're trying to space this out a little bit. And I think that was sort of the main takeaway from yesterday.
I'm going to ask you a question that I'm sure you've been asked already 500 times between last night and this interview. Do you think the Fed's done?
It's hard to say. I mean, you tell me what happens in the economy, Scott. If we keep going like we've been going the last few weeks, then no. And I mean, that was clear yesterday. But things could still go wrong, of course. I think it's hard, but not impossible, to come up with a list of reasons why the Fed wouldn't go in July. Weak payrolls, some unanticipated shock, much more severe banking stress. But it's easier to come up with reasons for them to go again in July, really based off of the communications and the projections that they put forward yesterday, and the fact that there just isn't that much hard economic data that we're going to get between now and the July meeting.
What do you think is going through Powell's mind right now? He said what he did yesterday. He certainly sounded very hawkish. And he looks up and he sees the Dow up 500 points. And he sees a strong rally across the board, and he sees rates falling. What do you think he's thinking?
Well, let's go back and compare to where we were right after the May meeting, right, Scott? Because after the May meeting, you had real concerns about banks. You had the market pricing in cuts, including like a 20% chance of a cut at the June meeting, which was crazy. So it's a different picture today, at least on the credit side and in the bond market, where you're not pricing in cuts very much for the rest of the year. That's different from May. I think Powell also has company with other Fed chairs when they stopped or got close to the end of raising interest rates. In 2000, the market went up after the Fed was done. In 2006, the market went higher after the Fed was done. It didn't stay at those levels forever, right? The whole point of monetary policy tightening is to slow the economy down. And I think the Fed has been pretty clear here that they see this battle against inflation as a longer process than something that you're just going to be able to achieve in a day or a week or a month.